Good morning, 1:53 Eastern time in the morning. Getting an early start, right? How much earlier can you get than that? I'm Kurt from aplacetotrade.com. Tonight we're going to go continue with the Euro chart and just follow up on how it's progressing, what's going on. One thing, I'm not a broker, selling anything here yet, but you should always read this stuff because sometimes you can lose more money than you deposit with your broker, and of course hypothetical or simulated results can have its limitations because you don't have the emotion of going on with real money. The Monday night session, we're going to do a chart jam just like 11 o'clock Eastern time. Just log into it, go to webinar, and you can see my screen and listen to it, and I'll try to discuss some, maybe some fun things like a Bollinger Band or a Keltner channel, and compare it to median lines and why I use a median line. Last night we were here. Let's see if I can get the full screen, and I closed because I said I had to go because it was decision time. Okay, I'm not the kind of guy that goes into a breakout trade. A lot of people do it. And in a rising bull market, it's one of the simplest ways to trade. You buy this breakout and have your stop down here, and and hopefully the price just keeps going on. I get a little nervous because so many times I've seen the market just fake us out here and come back down. We talked about symmetry in this area. We measured down to get this area. Okay, we talked about the neckline being an equator line, we called it, and how price broke through it, and then it pulls back and retests it and continues down. Now, that's one of the main median line rules, Andrews pitchfork, is Dr. Andrews, when the price goes through a median line, it will retest it. So it's the same principle here, and a lot of people do it with a simple moving average. I could put all this stuff in text and write it, but it's really hard to read 18 paragraphs and go and flip the page to go back and look at the illustration. So I think we're going to be better off with a video. Right here is where I said it was decision time, where it was starting to and you can see how it broke out, faked a few people out, and then pulled back in, and the lines were here, the equator I called it, referred to the range being different tropics of Capricorn and Cancer, and we move forward and we can see that the breakout finally it faked us out here, came back in, caused a little pain on the breakout buyers, and it moved forward, and this is where we are now. I want to keep these videos short and to the point. We took a measurement from the shoulder. We brought it down, we took a measurement from this shoulder, we went over here, found it here, found other areas in here that were similar pullbacks. So we talked about the break of the equator, the break of the neckline, and the pullback to it, and a little fake out there on the exact line, and then it continues lower. We talked about resistance becoming support, support becoming resistance. All that means is, it respects a line here, which really the line is a price area. Okay? It's not like something that we're just making up. It's places where, you can see that people came in and brought it up, and brought it up, and then it comes down, and then becomes sellers, and then here we go back up. As you can see right here, it broke out and it pulled back right to the neckline, almost the same distance of kind of like this area was the fake out, and this area was kind of the fake out. There's some rules with the overshoots and undershoots in the sliding parallels used even on rectangles, triangles, they all seem to work. But the interesting part here is, when you talk about actions and reactions, lengths of the moves and symmetry and you can see that this pullback was right the same length as the the pullback in the short sense. Here it was a pullback in the long sense, but the markings were there. And then there's always, of course, the simple trend line, which is a forward indicator as well, in my humble opinion. And you can see that the price, hit the trend line. You can see the red dot, and then it hit it again, and bam, it takes off. It takes off for nearly 27, 28.37. Let's call it 100 ticks. That's $1,250 in the euro contract per contract. And then it goes up, and again, this set of lines was on last night's video with using a low, high, low, and then drawing the median line center through it, projecting a price forward. And one of the main rule is to remember with median lines is there's a high probability that the price will reach the latest median line. In this case, we had the C correct, so it reached the median line. One of the other rules is once price goes through a median line, high probability the price will return to it and then resume the direction of the trend. Now you can apply that to the head and shoulders neckline on the equator line we have here. It broke through it, pulled back down. It broke through it, pulled back, and continues up. The problem with some of these areas of like this, when you're thinking about a stop, you have to think in terms of probability. You're going to win some, you're going to lose some. This is a 20-minute chart where you might want to go, and filter that in, with some other entry, and you got to use stops. You got to have a price of a stop, and matched up with the size of your portfolio, of your account value, kind of. We'll cover that in another day. But here you go. Andrew's rules. Bam. This is the chart that works so well with as far as respecting the lines. I'm going to put this chart on the side somewhere, and I'm just going to go back to it and review it a little bit further along, as see if the lines come back into play. And for now, again, I'm at placetotrade.com and email Kurt at placetotrade.com. We can send you these clips in a video through your email.